What is good, traders? Welcome back to the series. In this episode, going to be a little different. We're going to be showcasing some live trading, going to be doing some data collection, stuff like that. You can expect some pretty interesting results in this episode. We also draw some conclusions, and I think overall you will gain a lot of value of watching through this entire video. We're also going to try to keep it interesting for everyone, so I'm not going to yap too much. Just going to be a chill experience, showcasing the trades, the wins, the losses. And then, of course, we will be journaling all of them and then in a later episode, get back to you with some more data collection. So without further ado, let's get right into it. I found myself in another position. Let me quickly share the screenshot of the execution because I had to be kind of quick. I noticed it quite late. We'll show you the MetaTrader execution here. This is what the position looks like at the moment. We are in, as you can see, right above this candle's high. And then our stop loss is a little bit above that. And then our TP is down here, exactly here. So it's exactly 2R, a little bit more than that. So our stop loss is 17.2 pips, like this. And then our TP is 34.6 pips. Again, this was just the normal risk. So another picture perfect example of how to trade this specific model. So we're trading away from the high. So really neglecting whatever is going on right here, we can then see that the market started to liquidate. We formed this, which is also, I think, quite visible on the 5-minute. We formed this bit of structure here, ran above, and I suppose tricked people into longs. And then now we're reacting to it. That's very nice. And now we just have to, play the waiting game. In the meantime, I'm monitoring EU as well, because on EU, we also ran above this high. We already won this specific trade. We have a sweep, so now we just have to wait for imbalance here. And whatever happens, happens. We just execute a model, that's it. On EU, it seems like we are sweeping the high once again. So now we could wait for another reversal, fair value gap to form, take an entry. Gold is running into a little bit of profit so far. Yeah, we don't have any management rules set whatsoever yet. So all we have to do is just let it run. We can literally do anything we want now. Set an alert when it wins, set an alert when it loses, and that is that. That's all we do. Nothing more, nothing less. Simple model, and we're investigating whether this model is going to have a long-term edge, in which conditions, that's why we are collecting data. We can all execute it, we can all see it. It might require some discretion at times, but overall, the rules are the same. So everyone should see similar results with this. We already have a nice idea of the losing streaks that we can have, the winning streaks. In backtesting, we had a 7 winning streak. So technically, if we can win 7 trades in a row, we can also lose 7 trades in a row. You have to be very mindful of that because we have a 50% win rate. So if with a 50% win rate, we can win 7 times, we can also lose 7 times. Chances of that are small, but they are definitely there. So to quickly recap what we've been seeing, I was waiting here for a potential sweep and reversal. Didn't really get that. Instead, price pushed way higher. Here was a fair value gap. There was nothing really swept at all. So I was waiting for this to happen. We had a run above this high, no fair value gap, so no entry. And then now we run above that high again. And so we wait. This would be even better, that we run above these relative equal highs. A crazy reaction. So we did take this out. So technically we have to take the trade if it presents itself. On gold, we are now running above these highs. What a nice reaction here on EU. So I'm going to prepare my MetaTrader to execute on this. You know what's very silly? On my broker, it actually took out that previous high. Actually took this out. Send a screenshot in just a second. I'm going to prepare so that I'm able to execute in a good minute from now. Gold swept this, is now possibly also forming a fair value gap. So we could, in essence, take another entry. We could, in, of course, 50 seconds from now. I can already prepare a limit potentially. Confusing price action on my broker. It seems to have gained a lot of momentum all of a sudden. I'm just going to use the candle open as my reference. And let's see, is that the same? 2.9. It's a little bit lower on my broker. I'm going to trust my broker's price action, of course. Then I'm going to target 2R. Let's see. 26 seconds. We wait. On gold, there is no fair value gap anymore on gold. So no entries for us on gold. This is starting to really look like a sweep. So we have to start questioning, is the position going to be interesting? But the point there is we don't know. We don't have data on it yet. So we're not going to make any assumptions based on that. So the trade is at 2.9 for me, which means right here, 2.9. It's here. So if we touch this point from now, then we are filled. Go. Stop loss is 5.1. That's here to include spreads. And then my target is going to be 2R. Let's see what gold is doing for now. Still running, so that's good. Yeah, and on my broker, by the way, that is actually the fair value. Yeah, let me show you. And let me also show you what I mean that it actually took out that high. So here is the picture of where I set my limit. This is where we executed this trade and made money. And as you can see, I don't know if you can see it with my marker, but this high actually got taken out here. We started pushing away. So on my broker, that's an additional layer of confluence, right? And as you can see here, we have this gap in the volume. I will include that as the fair value gap because in essence, it just connects to this. Like on TradingView, what we do is we try to make the candles really clean, but this is the true imbalance right here to me. So that is what I will be trading off of. So if the body would have closed right here and this one would have opened here like we do in TradingView, then we would assume that this is the fair value gap. Now we just have a gap in how the price, how the candle printed. So we're going to use that as our high probable imbalance, right? Waiting here, see if we can get filled. Put this to the side. We can have this as reference. Let's look at gold. Still running, but quite slow. We took out this low here. So we could see a strong reaction to it, possibly even retake out that high, just reading price here. And EU has been filled. So we are now in a position on EU. Very interesting to see what is about to happen here. Running into a little bit of profit. And I also see that gold is around the same amount of profit. So now we also tap into that fair value gap that we have here on TradingView. Very visible. Let's see what happens. All right, so I'm still in these two positions, as you can see. Yeah, it's on EU, it's running great. I'm not going to jump to any conclusions yet. On gold, it has gone into a little bit of drawdown, took out this particular high here once again. So we could actually, if we present a fair value gap, decide to scale in. We have to, right? I've seen these type of situations and I'm actually browsing YouTube in the meantime, where I see people on live streams, they get really excited when they see stuff like this. It's very important. You need to master your psychology, knowing that this could run into profit as far as it wants. As long as TP isn't hit, it's still a loss, right? For me personally, if I trade, I will write off my entries as a loss by default, right? So let's say I am going to go short and I'm risking $1,000, for example. So I go short, I risk $1,000. For me personally, I go to my journal and I also mentally do this. I just say, okay, this trade is going to cost me $1,000. So I only have one possible outcome, right? Because my main outcome is already going to be I'm losing $1,000. Now, if it runs to 5R, then the other possible outcome is going to be I make $5,000. And that's the only alternative that there is. So if I take a loss, it doesn't really mean much to me because mentally I've already positioned myself to have taken the loss. And this is what I mean. So now we are reversing again. For me, again, that does not matter. We can reverse all we want. We can push back down, push back up. It doesn't matter because I already took a loss. The only possible outcome is that my idea was right and it makes me money. But other than that, I've given my money to the market in order to find out if my ID was right or not. So currently, if I look at my positions that I have open, I had one win today. So overall, right now, I am at break even. While I'm P&L wise, I'm still in profit. This one just hit stop loss, by the way, the gold trade, which is fine. That means we can actually start looking for a potential re-entry if we reject off of this level. So that's good. But it's very important that we position ourselves into a psychology that really resonates with how the market works. Because I see a lot of streamers and novice traders that see this and they already consider it a winner. And then when price starts to reverse, they're like, but I was so close to win. I'm going to move my stop loss. No, that doesn't make sense. You haven't won. You've just lost as soon as you enter the position, and you've only won once this line hits. The position can look good, right? This was looking good, but the fact that it looks good or bad has no reflection or no merit on how the trade is going to run eventually in the end anyway. So why even bother thinking about it? Why pollute your mind with emotions of greed, fear, and thinking, this might win or this might lose? It doesn't matter. You're just executing based on what your data is telling you. right? What the market is doing right now or today or this week has no merit on the bigger picture of what we are doing. We are not traders, we are just risk managers. We execute based on the parameters that our strategy and our data tells us is lucrative. Just like if you were to enter a casino as a blackjack professional who is counting cards, you will enter big as soon as the card deck is in your favor. Now, you could go down 70,000, 100,000, it doesn't matter. You just keep risking because you know that in the end, if your edge is there, you are going to be making money. Doesn't have to be today, it could be tomorrow. Could be the day after, could be next week, could be next month. You just execute when your edge is there and you know how much you can risk or how much you cannot risk before walking away. That's all you need to know. You need to risk based on parameters that you have studied and that hold a algorithmic and statistical edge or background, right? Other than that, we don't do anything. We don't touch anything. That's all we need to do. This shouldn't make us happy. This shouldn't make us sad. It doesn't matter. It has no merit on the long-term outcome is what I'm trying to say. And that is a problem that I see with a lot of people. So try this trick. Just try to say, this is my stop loss. Okay, don't see this as the loss. No, you've already taken the loss by entering. So as soon as you enter, accept that you have already lost money. And the only possible outcome is to regain that money again. And trust me, your psychology will completely change. You invest money into something and you know damn well that that money can vanish. It has already vanished until you plan on cashing it out. This is not cashing out. This is you accepting I was wrong. And this was already set in stone right here from the get-go. So in essence, you factually already lose. You can only lose bigger, right? You can only start to move it because we never, without data, are going to move our stop loss lower. If we do that in the end, we're also losers. So on EU, sweep, possibly. No fair value gap, no re-entry. Here on gold, sweep, possibly. No fair value gap, no re-entry. And that's that. So once again, we wait. Alrighty, so we are going to get ready to potentially execute again here on EU. We have about 30 seconds to prepare our position because we had a sweep again. I'm just setting my stop loss. My TP goes all the way down. 20 seconds remaining before I execute if that fair value gap still exists by that time. If not, then there is no position for us. 10 seconds. Fair value gap is still there. 5 seconds, 4 seconds. All right, and now we just set that trade. So now we stack another position and we will see if we get filled or not. So position is here, stop loss here, and TP down here. So we are filled in this new position, which has nothing to do with the position that we are in, nothing at all. And we just wait. So let me quickly calculate where my TP has to be. So this is, so stop loss is 2.2 pips. So I need to target 4.4 pips. So my TP is, yeah, this kind of matches indeed. It's more like this. And then of course I cover a bit more. I think this is about the position that we're in right now. Cool. And now on gold, it seems like we could potentially expect another entry as well. So by the way, right now here on EU, I know that I can take 4 losses and I can take 4 wins in a day, right? Right now we have taken 1 win and 1 loss. That's it for the day basically. And right now, I'm very well aware that I'm now 2 more Rs in drawdown. Until I make that back, I am 2 more Rs in drawdown. If I make both of those back, I am 4 Rs in profit. That is how I'm thinking about this. By no means do I think this could be a winner. No, this right now is a draw off of my investment. I invested this and this, which costs me 2R, and I'm very well prepared to leave that out there on the table. The only outcome for me is, yes, I make 4 Rs. That's it. So let me also quickly show you how that right now looks on MetaTrader. These are those positions right now on MetaTrader. So as you can see, the green line basically represents my equilibrium of the 2 positions. And I can now see that both positions are actually of the exact same size, which means that the stop losses are the exact same amount. Let's see. Yeah, indeed, about the same. Yeah, 2.2, and that one was also. So basically the position looks a bit different. It's going to look something like this, 2.2 and then 4.4. That's the exact position right here. No real movement on gold, so no real plan on taking another trade or whatever. Seems like gold is gravitating to the Asian session high here as well. We do not use any of that because we don't know any of that, right? We're just executing the model, that's it. And honestly, if you approach trading like this, trading is actually not that difficult. You can probably tell from how I approach the charts right now with this model that it's not too difficult. There's also not too much stress involved. For you, there might be stress involved in the beginning, but that is why I'm doing these series. I'm trying to tell you how I approach things, how I stay calm. And I'm pretty sure we will be facing everything. We will be facing winning streaks, losing streaks. We're going to have a month where we'll like break even or make money or lose money. It's all part of the game. And that's what these series are all about. I want to show you how it is behind the scenes, like for real. In my personal trading, I have managed to really create some very robust models with very high win rates, and they are quite complex, but to me, they're still simple because I've built them from the ground up. So to me, I understand my system, I understand exactly how to execute it. But with these series, I want to show you like this is very simple. I personally see a bunch of red flags in certain positions like these ones, because if we take a look, for example, on EU, what do we see? We have a high, a high, a high, but that doesn't matter. We just wait for the sweep and we take a trade off of that. So that's it. And this could, in essence, win me positions that I would otherwise not take, but it's also going to lose me positions that I would otherwise not take as well. So yeah, I like just starting fresh. I like to show you that you do not have to be a perfect trader to be able to make even a living out of this. Let me tell you, I've been making money with this while if I look back at those positions, I'm thinking to myself, why was I doing this? This is not high probability at all. And still, I made a living off of trading. So these series are all about showing you that it is possible. I don't have to make a living today. I don't have to make a living tomorrow. I don't have to make a living this month, right? Because we're not just focusing on trading just yet. We are not traders yet. We are focusing on building a model. So I'm going to I'm aspiring to be a professional trader in the future when I have a robust model and I've proven to myself that I'm able to trade this model consistently, right? And then I'm going to calculate, all right, on average, this year, and this year, I made X amount percent. How much funding or how much capital would I need to make a sustained living out of this? Calculating possible risks or anomalies or drawdown so that I can live comfortably and don't need to stress about anything else. That is something we're going to cover in these series. We're going to cover absolutely everything from scratch all the way to becoming professional, cashing those payouts, everything like that. And trust me, there are going to be blown evaluation accounts, most likely, going to be blown funded accounts. But if we stick to improving every single day, just getting 1% better with our model every single day, by the end of these series, we are going to be making money with this model. And that's the reality of it. And the truth is, most people, they quit way, way too early. They see a losing day sometimes and they say, no, this model is not in for me. I just took 5 losses in a row. This is not my model. Doesn't work. That's complete and utter BS, right? So gold is, I think, taken out that high. Yes. We need to jump to the 15-minute and see what is going on. We are still trading short. We are still trading away from this. Why is that? This big push down is what actually took liquidity. This did not take liquidity. So the fact that we now break this is not a break of structure to me at all. So we're still trading away from these particular highs. So we are still looking for potential short positions up until we break that previous high. We're going to stick to that plan. We're not going to change anything because we get emotional or want to take entries. We have a plan, we stick to it. So we're going to go to the 1 minute here. We know where price is. We're going to look to the left. Do we have liquidity here? We have some liquidity here. We're going to mark that out. We have some liquidity here. So we're going to mark that out. Some here. And if we react to those points, perfect. And we can potentially take entries. Right now, it seems like we're pushing through this one. And again, you can hear me talking. I'm simply investigating other pairs while you can see this is going into profit, into drawdown, into profit, into drawdown. It doesn't matter. You have to be like this. You do not have to be a robot. You just need to be realistic about it. Find means to convince yourself that touching this line or this line is okay and it doesn't matter. And to me, that is a technique that I was just explaining. The technique of saying, yes, I have already lost. Because in life, you have to think about it psychologically. In life, what do we learn? Even from being children, we learn in class that if you have a good test, everyone is going to be happy. Your parents, your family, your teacher, everyone's going to be happy and applauding for you. If you have a bad test, that's bad. So we always learn that being wrong is bad and being right is good. Now, in this case, if we start doing that, we're going to get very emotional because we are trying to get those good grades. But instead, we're getting bad grades and we think that's bad, but it isn't. For us, only having 5 out of 10, or I don't know how that is alphabetically in America, for example. But let's say you score 50% on a test. For us, that's enough. At that point, we are making money. Even if we score 33% on our tests, we are making money in essence. We are at break even. So we have to really let go of those old fashioned patterns that actually set us up for failure in the long run in this trading game. Because I dare to bet that 90% of beginner traders, when they see this, they already called it quits. They already jumped out of their trades in either a little bit of profit or a little bit of drawdown at break even, doesn't matter. And while, for example, let's say these trades are going to lose, which is perfectly fine. If that happens, yes, you might have dodged a bullet, but let's assume that it doesn't go to stop loss and instead it goes to just take this out and reverses really harshly after that and makes you money. In that aspect, you are losing in the long run because your losses are have far less gravity than your winners. We have to keep that in mind. And again, we could also keep in mind that we have this right here because we can still lose another trade. Let's assume that these two trades are going to be losses. I already do so, right? So we took one loss. We have two more losses here potentially, and we can take 4 losses, right? So then I could scale in if price were to sweep this and reverse. Let us see. I'm not stopped out yet on this position, but I presume that I soon will be. Yes, we have a confirmed loss here and another confirmed loss right here. So we are now down 1 R for the day, but we already were with these positions, right? But now again, we are down 1 R for the day, which is 0.5% with these two trades and this one as well. So we are now down, let me see. Yes, we are down 1 R. So basically this win got canceled out by these two losers. And then we are now -1 because of this position. Doesn't change anything about our strategy or our approach. Right now we are sweeping again. We can take one more loss or we have to call it a day because it's either 4 wins or 4 losses on the day. And I do think we'll have to wait a little bit for new positions to actually come on in. So I'm going to quickly stop recording and I will get back to you when a new position occurs. I forgot to hit record in time, so I was yapping to myself, but that doesn't really matter. So I managed to squeeze out a position here on EU that is currently running. And then right now I'm also forward testing, not actually executing because I'm also training myself to stick to my rules. I'm paper trading this particular position as well because I've hit my loss limit if I lose this one. Right? I have had 1, 2, 3 losses. I've opened a new position. I can only expose myself to 4 losses. So that is why I have not opened this position, assuming that this position is in fact a loss. Yeah, overall, we'll have to wait and see what happens. By the way, it might look like I did not get filled here, but I actually did. I did on my broker, and I will show you the screenshot in just a second. Currently running 3.4 pips in profit on that particular position. And this one is seemingly going to hit stop loss. Good that we didn't execute that one, because if this one now reverses, then we have broken our own rules. All right, so imagine a scenario right now where this position right here presents us with a fair value gap. And hypothetically, you would hit TP. We would be allowed to take another loss. And my TP is, by the way, right here, something like that. So in such a world, we could be entering in a new position. So that would mean that EU has to hit TP within a minute because it could just as well do this, right? It's like an evil scenario that really gets people all of the time and then just go straight to stop loss here. That could happen. So we really need to wait till this position is filled. We do not assume that this is going to be a winner. So we wait. And if it does hit TP, we then have a potential fair value gap here and an entry that we could actually execute. We could not execute this one, but we can then, because we have room for one more error, we could then take this position, right? Make sense? So that is how I will approach the risk profile here. And I think even this fair value gap is going to be closing up. So probably no positions. Yeah, closed up. So no positions on gold anyway. And I think to a lot of traders, this right here as well is complete horror, right? So it came down to almost your TP and now starts to just push away. And I see a lot of students, a lot of traders in general who would close our position now because they see, oh no, we pushed up away from it. So now we're ready to reverse. Who says that? How do you know that? Isn't it possible that it is just an emotion that is kicking in, right? Isn't that just an emotion? Aren't you still in profit? And isn't the position that you took still relevant? Those are all very valid questions that you need to ask yourself in this game. This game has no room for emotions at all. If you feel like within any of the trades that you are taking, so let's assume that in this trade I got emotional and in this trade I felt emotions, at that time I would close my positions and I would say, no, not my day. Just gonna step away, especially if it would involve managing risk. You cannot manage risk when you're emotional. It doesn't work like that. So as soon as you feel I don't have rational control over myself anymore, take a step back. And I've talked about this extensively. For a lot of people, you're going to be able to make two very emotional decisions in a day per category. Meaning that if you have to take two very emotional, rational decisions in trading in one day, you're going to be depleted. You're not going to have the emotional fortitude to make another rational decision. It's unfortunate that we still have this position running. Now, the loss would not be good because we would not be allowed to take an additional one. But assuming that this is going to be a loss, I'm not allowed to take another position either. Because right here, as you can see, we did have that sweep. So stop loss could potentially be here. So let's actually paper trade this as well. Our main goal right now is not to win or lose or make money or lose money. It doesn't matter. Our main goal right now is to be collecting data. And now because we have the luxury and thus the opportunity to study which entry would be more optimal, and we can record that in a journal, not in the forward testing journal, but just a study journal, can now mark up both of these fair value gaps. For example, say, what if I would take my position on this one versus what if I would take my position on this one? And then we can make that a parameter. And then we can see what is the most lucrative to do, if it fills at all, right? And I think these trades that we are taking here are like pinnacle trades. Why? Because I think for a lot of people, these type of trades will spark a lot of emotion. Let's say you execute this trade right here. You execute it and you can already see that price is hitting your stop loss. A lot of people would start to think, oh, please, 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 please reverse and I'll get out at break even. Please, please. The price comes to break even. You close the trade while you've missed a potential TP. Let's say you were to risk 1-to-1. Boom. You would have already hit TP. And because you let fear into your heart, you missed out on that. So these two positions, no one is going to be able to tell us whether this one is more likely to be a winner or this one is more likely to be a winner because we don't have data on it. So we cannot say stuff like that because this one might be a winner, right? It almost hit TP and this one almost hit stop loss. So how funny would it be that this one hits TP and this one hits stop loss? I mean, it's all possible in this game. That's just the thing. Right here, we could, in essence, position ourselves if we hit TP for another short, or we could say we're going to stick with gold. We cannot do both, so we have to pick one. I think overall EU is making more pleasant moves. So in that regards, since I have to make a decision, which could just be the roll of a dice, I will allow my emotional self to pick that I prefer EU in this specific instance and focus on entries there. So yes, EU actually just hit TP. That's very good. Perfect. So this was to our, and then this is to our. So basically for today, with this little forward testing session on EU, we made +2, -1, -1, +2. So we're up to R. And then with that gold trade, didn't really hit TP yet, did it? Give it a few seconds or a few minutes. Price can do whatever it wants to do, right? Can even go back to stop loss. Doesn't matter. I have no control over that. But there we go. That's TP. You also see how my emotional state of mind doesn't really change. Nothing really happens. I just execute it. Price is now running. It hit TP, it hit stop loss. Nothing really changes for me. And that does come with experience, but it also is very much in the way how you decide to approach the whole thing. Ah, yeah, by the way, for this one, because it looks like it didn't fill, I'm going to just drop the full day or the full session that we had here again. And that looks like this. So if we zoom in, we can see that I really got filled at like the top here. Price just ran to my TP, took me out, and that's that. So we had win, loss, loss, win, only sells. And then on gold, unfortunately, I cannot show this position because as I said, this was just a forward testing position. I did not actually execute on this one because of this trade and because of this loss, right? So to summarize, we had -1, -1, -1 here as well, which brings us to -3. We are allowed to go to -4 on the day. So that means that if I would have opened another position, assuming that both went to a loss, I would have -5, and that is not allowed. So very important to stick to those risk parameters. So yeah, overall, we are ending the day. We made 6R today and we lost 3. So we end the day overall with +3R. That's very good, right? I don't think that's too bad. I would be happy with that. Even in my professional career, I would be happy with 3R. So I might just say I'm calling it a day. Why not? I've now worked for is now 9. I've been in front of the chart since 7. So I've worked for 2 hours and 5 minutes. If this would be a 400K account, let's assume that this was 400K, and I would make 3R, risking 0.5%. I would have made 1.5%, and 1.5% of 400K is basically 1.5 times 4, which is 4.2K. And I don't think 4.2K is a bad payday. If you traded this model on a 400K account, you would have made 4.2K. And the thing is, I see a lot of people, they say, 1.5% is not a lot, but try to reflect it to something like this. Because if you can consistently acquire 400K in funding, risk 0.5% on that and make this, wouldn't your life change? I mean, that's life-changing money right there. Some people don't even make this in a whole month. You made it in a day. If this is enough for the month, then enjoy the freedom. I hope you understand where I'm trying to get with these whole series, right? It doesn't have to be difficult. You don't have to work long or hard. Just work systematically, stay consistent in collecting data, refining your edge in your executions. Think positively. Don't think, oh, I just made 1.5 or I had 3 losses. We know that we were going to have 3 losses and 3 wins. We know that we have a 50% win rate. We have done very good today. Just envision yourself that you could have made this today if you had that 400K. Do not force yourself to go get it. Just understand that it can actually be this simple. Just put that in your mind. Let it motivate you. Try to think about it. Envision that. And that's all I really wanted to do here. I'm going to end today's session. So today is Monday, the 9th of September. We did this live. A lot of people are not able to do this. We did it. We made this with a base model. And I will continuously do this every single day and share the results, keep you updated throughout this whole series. And then as soon as we feel like we are ready and we have a big enough data set, we will move to funding and we will actually try to go not for 400K. No, we can start with 10K. I think that's very realistic for a lot of people. So perhaps we do that. We start with 10K. Then as soon as we see that that works, then we also know that it works on 400K. And then later on, when we get some payouts, when we prove to ourselves that our system works, we can then scale up. And what is holding us back then from going for that 400K? Alrighty, so that was it for today's episode. I hope you enjoyed this episode. I hope you learned a thing or two. If you found this helpful, I would really appreciate you leaving a like, a comment, maybe even subscribe if you want to see more videos like this in the future. Because as you might know, these type of videos, they do take quite some time to make. Now, make sure to stay tuned for future episodes. And other than that, thanks again for watching, and I will see you in the next episode. Thank you guys. Bye.